Yo, what's up guys? In today's video, we're going to be talking about volume confirmation in the technical analysis trading setting. So let's begin. Basically, volume confirmation is that we get confirmed that the stock is actually trending in the direction that we think it's going to trend in, and it's not a false confirmation. In today's video, we have 4 topics, and I have these 4 topics. That is, volume should confirm the trend, volume should be at high key levels, and volume can be a warning sign, an example of confirmation. So we have 4 different topics that we're going to be going over in today's video, as you can see, and let's get started in this video. And I also have this technical analysis as why it's going to be important. As you can see, we'll go over these after we finish these 4 subjects. All right, so let's start. So volume should confirm the trend. Basically, if we see an uptrend like this stock is trending upwards, correct? Everybody can see that? Yes. It is trending upwards, but we don't know if this is going to 100% be an uptrend. We see that it's trending and it makes this pullback move, which is great, and that's what we're looking for. It makes the pullback and then it goes upward right here. That's exactly what we want to see, and that's what we're looking for charting wise. But we want to make sure that the volume of the stock is congruent with the price going upwards. We want to make sure that when trend goes up, when we get an uptrend in the market, we want to make sure that also the volume is increasing as well. Because if we don't if the volume is increasing and the stock is going the opposite direction, that is what divergence is. And that is a bad sign, because that can be something like a reversal where it goes downward instead of the direction that we want. And there's a lot of fake breakouts. You'll maybe see a stock come up and it won't really do anything. It'll just stay here, like this one comes up. Oh, you might think this was going to be a breakout, but it just comes here and then boom, goes down. So there's a lot of examples of false breakouts. So we want to make sure that when we're looking for a breakout, it confirms the trend. Okay, if it's a downtrend, we want to make sure that the volume is decreasing as well. And if it's an uptrend, we want to make sure the volume is increasing. Next, we have volume should be at high key levels. Should be at a high key level. Say this stock was trending in a direction. Let's go back further on the charts. A lot of stocks tend to hold a range for a while. As you can see, this was from July all the way to September. All right, so in this range, this is kind of a support and resistance range. You have boom, it doesn't cross underneath here, but it also isn't coming above here, as we can see. So when the stock is staying in such a range, we want to make sure when the stock is going to break out of this range that it's been in, that the volume is also congruent. That the volume is congruent with the trend that the market is going. So if we see that the support and resistance zone is broken by a trend that's going upwards, the volume should indicate that at that level. Next, we have divergence. Divergence is when a stock is trending in a certain direction, but the volume of the stock is going in the opposite. So if we have a stock that's on an uptrend, but then the volume is decreasing, that is divergence. And vice versa, if we have a stock that is going on a downtrend, but the volume is increasing, we know that this is divergence period. We do not want to trade divergence periods because we are at a risk for a reversal. So the stock could be trending in one direction, volume going the other, and then we could get a reversal where the stock just trends the opposite direction that we thought it was going to. We also want to take this as a sign to maybe not trade, but we can use this not solely based if we should trade or not, but as an example of one of the signs that, okay, today might not be a day to trade, but we should proceed with caution when we see examples of divergence and need further confirmation before we enter any positions, because we don't want the market to just think it's going in one direction and then crash to that bottom where it's going the opposite direction. Last, we have volume confirmation. Volume confirmation is basically when you see a trend and the volume of that stock actually is congruent with the trend's direction. So if you have a trend that is rising upwards and we also have the volume that is increasing, this is telling us that the trend wants to go in that direction. It's showing us that a breakout wants to go in that direction, and it's a signal to enter a position. It's essential for technical analysis because it secures the volume, and it is vital that we get confirmation because this allows us to predict where the market is going to go, and it hits all the technical analysis points that we are looking for. And we are less likely to see a big reversal in a different direction than the one we entered into. In our next topic, we are going to be going over our 4 reasons why volume confirmation is vital, and we're going to give you real examples of what it does on the charts and how it actually affects, the position, not just hearing about it and hearing what it does. All right, so let's start with number 1, which is improves accuracy. By confirming the trend with volume, traders can be more confident in their analysis and avoid false signals. For example, if a stock is trading higher on low volume days, it may be a sign that the price movement is not sustainable. In contrast, a stock is trading higher on a high volume day, it suggests that a strong demand for that stock is there, and the price movement is more likely to go up in that direction. Number 2, we have identifies the trend reversals. Trends can be identified when the trend is losing momentum and may be out to be reversing. For example, if a stock has been trending higher but the volume starts to decrease, it may be a sign that the trend is losing momentum and may about to be reversing. Number 3, we have provides additional insights. Traders can get a better understanding of the market's sentiment towards a stock. For example, if a stock is trading higher on a high volume day, it suggests that there is a lot of buying interest in that one stock. On the other hand, if a stock is trading lower on a high volume day, it suggests that there is a lot of selling pressure on that stock, so we do not want to enter that position. And at last, number 4, we have enhances risk management. Volume confirmation can also enhance risk management in trading by confirming the trend with volume. Traders can set more effective stop losses and reduce their risk of exposure. For example, if a stock is trending higher on a high volume day, traders must set their stop losses at a level that is below the recent low. This can also help to limit their potential losses if the trend were to reverse. The last thing I'm going to show you guys on this video is how we can use volume confirmation to enter trades, like in number 4 says, to enhance our risk management and reduce the risk for exposure. So what I do when I enter a position is I go on the 5-minute time frame right when market opens. So what we do is we look for a position on the 5-minute time frame right when market opens. We see that we want to enter a position as soon as the trend is breaking upwards. That is ideal. But obviously it's not always going to be that easy. We see the body in the candle of the wick. The wick is all the way down minus 20 cents. We don't necessarily want to put our stop loss down that low because we know if we risk that much money, we're going to be losing a lot of money in that 30 cents decrease. So we want to enter positions that have a strong body. We want to enter it as soon as possible, obviously, but we want to enter at that bottom of that body that we enter. If you go to enter a position a little bit later down the charts, you can see that the principles still apply. If volume is trending in an upward direction and volume is following the trend in a right direction, we can take a trade and we know that it's not going to come below that point. And if it does come below that point, we are right out of that trade, not risking losing pretty much any money. The reason we put our stop loss at the bottom of the first 5-minute green candle that we're going to enter is because we want that tight stop loss. So we will know that market is trending in a direction. We have confirmation. We know which direction the market wants to go, so we can assume that it's going to go upwards. That's why we have such a tight stop loss. And therefore, if the market does trend and moves upwards in a momentum pattern, we make a fuck ton of money. But if it doesn't, and it comes down and hits your stop loss, you're only risking losing a small percentage of money. That's why this strategy is so efficient, because you can lose 5 trades in a row, but you win 1 trade and you're up a lot of money. You guys, that's it for this video. Volume confirmation. I would highly suggest you guys go check out this link. I'm gonna link it in the description below, but it's Faster Capital, the website, and it's volume confirmation enhancing the accuracy of technical analysis. And it'll just explain to you guys all the different reasons why volume confirmation is so vital. And you guys should take some time, take 15-20 minutes out of your day to read through these, and it gives you charts and it gives you different things to better understand this. But I hope you guys enjoyed this video. If you guys have any more comments, concerns, want some more information, any specific topics about the breakout structure, you guys know where to leave those comments. My Instagram is going to be linked in the description of this channel. It's all going to be there for you guys to look at. So I hope you guys enjoy this video. Like, comment, subscribe. There's more in the future, and I hope to keep showing you guys different things, and I hope to grow your trading journey with me. We're on this journey together, but if you guys enjoy this video, see you guys in the next one.